Bitcoin has been ranging in this ascending triangle for the last 27 plus days, and it finally broke bullish at the start of 2024. Will the price moonshot from here, or possibly retest the top of this breakout? Or is this a bull trap and could there be lower prices ahead? Investors have been expecting a Bitcoin ETF to be approved sometime this week, the first week of January. But could this be a buy the rumor, sell the news event? I'm going to do a multi-time frame analysis on Bitcoin and take a look at the monthly, weekly, and daily time frames to get a sense of the market psychology. Here we are on the monthly chart, and you can see that Bitcoin has been printing various monthly candles above its 8-month exponential moving average, which historically represents a bull market. And we can see that right now it's coming across some resistance potentially right here, which is in this congestion zone with these monthly candles. For it to really get bullish and moonshot, it would have to get above this, I say this candle wick right here, this swing high, which is around a $48,240 level. And we can see that, let's take a look at what the Asian traders are looking at, the Ichimoku cloud. So it's made a bullish move above the Ichimoku cloud, so it got through all this congestion right here. Oh, this is not a good sign though. It looks like a bearish flip on this cloud right here. That's interesting. So potential Asian traders may be looking to short around this level at some point. But let's see what the Western traders are looking at. Let's bring out the Fibonacci retracement tool, measuring from this swing high to this swing low. So it's exceeded the 0.5 Fibonacci retracement, and it's heading towards the 0.61, this is blocking right here, the 0.618 Fibonacci retracement level. This is the golden ratio that has been respected by time and space since the beginning of the freaking universe was created. And I would say that would be the bear's last stand to short right there. And it's coming close to this potential buy the rumor, sell the news with the ETF. Let's take a look at some indicators though.
Anticipation of Bitcoin ETFs are pumping the price over the $45,000 level.
Beware, my friend. There is a phenomenon in trading called buy the rumor and sell the news.
But why would anyone sell on such a bullish event with billions of inflows coming into a Bitcoin ETF?
Those inflows won't happen overnight, and once the news hits of an ETF approval, what other news event can top it?
So, if there is nothing greater to look forward to,
the demand loses momentum and the whales sell.
The on-balance volume shows that we've broken out of this inverse head and shoulders. The last time that happened was, it ended up in this crazy moonshot that what is this? That made nearly a 400% move. And here we are breaking out of that. How far has it gone since we've broken out of that inverse head and shoulders? About a 50% pump. Awesome. Let's take a closer look at this. So we're above its 21 simple moving average on the monthly time frame, and I bring out my support and resistance lines. You can see that it is above resistance, but is not above this bullish breakout zone. Let's take a look at it. It really needs to exceed this bullish breakout zone, this high of this volume right here, which was the previous monthly swing high. So we'll see what happens. We still have another 28 days for the monthly on-bounce volume to print. Here's the MACD, which is the most popular indicator to help confirm the trend. And we can see that the MACD line is above its signal line, so that is a bullish cross right there. And the histogram is showing bullish momentum. So there is no doubt that the trend is bullish. Clearly the monthly chart is up, so I'm going to mark this screen green right here. Here we are in the weekly chart, and we're going to take a look at the momentum within the trend of the monthly chart. So the momentum clearly looks bullish. You can see that it's above its 200-week simple moving average and its 50-week simple moving average, which is going to actually do a golden cross. I don't think it's ever been done before. There's not enough historical data that goes back to show what would happen. The one fear I have about these golden crosses is sometimes it is a buy the rumor, sell the news event where the cross happens and then price all of a sudden pulls back to retest the top of the cross. But there's no historical data to back up that thesis, so we're going to scratch that idea. Let's take a look at the trend-based Fibonacci extension, what the Western traders are looking at, and we can see that it did exceed the 1-to-1 move right here. Had it done this Elliott wave ABC correction, that would have been bearish if it started turning over right here, because that is, for those of you who study Elliott wave, that is psychologically a bad thing. Humans love things in harmony and balance, and that instead of this ABC correction, this could potentially be, let me bring back that trend base, this could potentially be an impulsive wave where it could look something more like this, where we hit the 1618 Fibonacci extension. This is the golden ratio right here. And so this $50,000 level is in the cards. The on-balance volume is clearly bullish. It's above its 21 simple moving average. And bringing out my support and resistance lines, we can see that it's above this bullish breakout resistance line. So the effort to produce this result is consistent. The stochastic RSI is another popular indicator to look at momentum. And we can see that it is turning down right now, which is a negative sign. It is possibly could pop back up, but right now this indicator is below this upper band, and it does worry me because the last time that happened, looked like it did result in a pullback for several weeks. Here's another one where there's another pretty dramatic pullback, and even this one right here, the rejection off the 50 simple week moving average, that results in a massive pullback into the bear market. We are in a bull market right now, so this could reverse back up from here and find support on the top of this upper band. Price really needs to get above this line right here, the $46,787 level, the previous bear market drop, to really send us out of this bear market. I would say price would really need to drop below the $40,000 big even to really send us into several weeks of a downtrend. But this is a warning sign in regards to the momentum slowing down. Clearly the momentum is up, and this does look like a bullish consolidation right here, where forces of supply and demand were trapped in a bullish pennant. They were equally balanced until it finally broke out on the weekly candle, which still has 4 more days to print though. Keep that in mind. Anything can happen. But because it is bullish, I'm going to give the weekly momentum a green dot. Here we are on the daily time frame to determine a bullish entry. And if I bring out the legend for the triple screen trading system, you can see that on the monthly time frame, which was the trend, it was bullish. On the weekly time frame, which was the momentum, it was also bullish. So you should really just hodl and not even do anything. But if you've missed this whole move and you're looking for a bullish entry, this is going to be a bit tricky because your stop loss really needs to be below this candle wick right here, which is around $40,150. So that's probably a 10% stop loss, man. Oh yeah. So you have a pretty wide stop right there if you want to go bullish. Ideally, maybe price will pull back. Let me take a look at this. The bullet. Okay, so we made this ascending triangle pop bullish. Maybe it will retest the top of this and you can go bullish. I don't know. Well, I'll have to take a look at a few indicators to see where we're at right here. The on-balance volume is clearly bullish. It's still above its 21 simple moving average. And if we bring out the support and resistance lines, we can see that it has broken above its previous resistance and actually flipped it to support. So the effort used to produce this result of breaking out of this ascending triangle is consistent. Now, taking a look at the popular indicator, the relative strength index for bullish entries and exits, we can see that it is getting close to this overbought level right here. I mean, it's not overbought yet, but oh no. You know what I see right here? There's actually a bearish divergence where the ceilings have been moving higher over time, but the ceilings on the RSI have been moving lower over time. So this is a strong bearish divergence. I would probably wait on the bullish entry. If you ignore this last candle right here, which has another 22 hours to form, and just look at the previous print, you can see that there is a very high upper wick right here, which shows that forces of supply are dominating forces of demand at the last candle print. But it does make sense for a pullback. Ideally, you want the RSI to hit this midline where this would be a potential bullish entry. It's a bit hot right now. I don't know, it's up to you. One last thing as a bonus, I do want to take a look at market cycles. Measuring from the previous floors, you can see that the Bitcoin has been moving in roughly, this is a cyclical tool. You can see Bitcoin has been roughly moving in these 60-day cycles. And we can see that they have been right translated, which means that at the midpoint, the ceiling of these cycles have been on the right side of it. So that is a right translated cycle, right translated. That means there's more bullish action happening for the more majority of time than there is bearish action. So that's what makes a cycle bullish. And so far, here we are at the start of a new market cycle. And there's still another probably, what do we have here? Another 30 plus days before we go into a pullback. And oftentimes in the middle of a market cycle, there's a mid-cycle pullback, kind of like right here, maybe right here. So it is possible we could get a mid-cycle pullback, and that's where I would want to go for a bullish entry for the day traders. Long-term holders, just hodl. We're going to the moon. For the degen day traders, I do YouTube shorts almost every other day where I do 60-second technical analysis on the charts. So feel free to subscribe to my channel if you want to keep up to date on what I'm doing and my thought process. And I will also be doing more analysis on charts for NFTs and meme coins. I feel like those are going to go just even more insane. Right now, all the action's on Bitcoin. The Bitcoin dominance is moving up. But once Bitcoin starts to hit this super high and starts ranging sideways, that's when you're going to start to see all the meme coins and NFTs go crazy. So stay tuned for that. And I do have some more other interesting ways of looking at the charts that no one has ever really looked at. And feel free to subscribe to my channel, and I'll keep you up to date. Thanks a lot.